Hey everyone, today we are looking at something every business must get right to survive and make a profit: pricing. How a business sets its prices can determine whether it succeeds or fails. To make this easy to understand, we'll use McZaba as an example while we break down for common pricing techniques along with their benefits and drawbacks. Let's start with cost-based pricing. This is one of the simplest pricing methods. McZaba would first calculate how much it costs to make a meal, things like ingredients, staff wages, electricity, rent, and other overhead costs. Once those costs are added up, McZaba sets a price that covers the cost and ensures it does not make a loss. The main benefit of cost-based pricing is that it is simple and safe. The business knows its costs are covered, which helps with financial planning. However, the drawback is that it ignores the customer and the market. If customers are not willing to pay that price, McZaba could struggle to attract diners, even if the price covers costs. Next is markup pricing, which is very closely linked to cost-based pricing. With markup pricing, McZaba adds a fixed percentage to the cost of a meal. For example, if a pasta dish costs 60 rands to make, and McZaba adds a 100% markup, the selling price becomes 120 rands. The benefit of markup pricing is consistency. Prices are easy to calculate and profits are predictable. This method is common in restaurants. The downside is that it can lead to prices that are either too high or too low compared to competitors. If nearby restaurants sell similar meals for less, McZaba could lose customers. Now let's look at target-based pricing. With this technique, McZaba sets prices based on the profit it wants to achieve. For example, the restaurant may aim to earn 100,000 rands profit in a month and then work backwards to decide how much each meal should be priced to reach that target. The benefit of target-based pricing is that it helps management focus on financial goals and performance. However, the drawback is that it assumes customers will buy enough meals at that price. If demand is lower than expected, McZaba may not reach its target and could even make a loss. Finally, we have competition-based pricing. This is when McZaba sets its prices by looking at what other restaurants in the area are charging. If similar sit-down restaurants charge around 150 rands for a main meal, McZaba may price its meals at a similar level. The advantage of competition-based pricing is that it helps McZaba remain competitive and attractive to customers. The drawback is that McZaba may ignore its own costs. If expenses are higher than competitors, matching their prices could reduce profits. When pricing is done correctly, it supports profitability, customer satisfaction, and long-term business success. If this helped you understand pricing techniques, do me a favor and share it with a friend and subscribe to the classroom for more business studies made easy.